Hello everyone. Today is Saturday, December 24th, around 3 p.m. New York time. First, let's wish everyone Merry Christmas and a Happy New Year. And second, let's start and do the regular weekly video update. After doing all the charts on the side, about 84 of them, we draw the conclusion that the market, this is our bias for now. The market is kind of a tossed bat with a bullish dollar. We have done all the charts, and we have drawn the conclusion that we believe that the U.S. dollar trend that happened, that started on May the 4th and around 72.69 is getting to the end, but we believe that it's not there yet in the most likable scenarios. We're going to try in this video to cover the higher degree charts and express to you guys how this can play out when it comes to market correlations, right? Now, let's start with the US dollar in the daily chart. As we have been saying, we have 1, 2, 3, 4, 5 swings. This can be labeled as 1, 2, 3, 4, 5, or A, B, Z, W, S, A, B, C, to ends a biggest degree W around 81, or an extension 81, 82, 15 an extension. Now, only if you look at the charts right here in the US dollar index, you can draw the conclusion that this move looks like it wants more outside. It has respected the channel from the lows so far, and we believe that at the end this should be the most likable scenario. The decline here is in 3 ways, which it dropped to the conclusion that if it's over here, it's a nest, and then we're gonna be in this degree very soon when it comes to the US dollar. Okay, that's for the US dollar. Now, let's move on to the euro dollar now. The euro dollar also in the daily, it have 2 scenarios. The first one is the one that is this one. This one right here has placed the euro for us into a D-way of a weekly triangle. After seeing the recovery from here, this, as you guys know, this can be labeled as a leading diagonal. I mean, the decline looks corrective. There can be the possibility that the euro is looking for this number, 29.14, 27.64, or in extension 25.16, before a higher degree correction take place. That's the same higher degree correction that goes with the US dollar. All right, so the question is the move from May the 4th ended already, or this move already have another leg? If we're gonna do the Fibo levels here, we can draw the conclusion that the 124.63, 125 is when this leg is gonna be equal down here, and 125.16 is when this leg is gonna be equal right here. So looking at the wave structure, now it looks like this move right here was A, B, Z, or A. There is 7 swings technically right here. So as of right now, because it's a 7 swing, you need a 3-way move down here. So far you have a 3-way. This is a 3-way. Now this can be the 4 swings, and needs to be seen is we're gonna do a 5th, a 6th, and a 7 to look down here. Now that's one scenario on the dailies of the euro dollar. Now let's move on in the euro to the 4-hour chart so I can explain to you guys the way I look at it. If we're gonna get more extension to the downside, like I say, the move from 142.47 is a 7-way swing. 1, 2, 3, 4, 5, 6, 7 swing. You can label it like that, or you can label it as a W, S, Y. This is W, S, and we can go in W, S, and we're going to have another leg down. Now, that's one scenario. Also, you guys know that we have discount when it's calling the move completed in the downside from 40 to 47. So with that in mind, you have to take into consideration and play the short terms when it comes to that scenario. 128.78 can be a possible another target to end this down move that started at 142.47. One thing is for sure for me, that the decline to 114 won't start from this level. I can draw that conclusion only looking at many risk assets and at the US dollar index as an index. Now, in the 1 hour chart of the US dollar, this is how we see it. We see it that if the proposal first leg or the S leg in discount ended right here, so it's not an ending diagonal, it's more like a three-way move. Now, I have an issue with this because this is completely corrected. I mean, if you take a look from here, everything, I mean, this is questionable, but then you go here 3 weeks, another 7 wave, 3 weeks, so I'm expecting a bounce from 129.90. That's one scenario. The one that is going to stand, let's say that goes to 130, that one can stand to around 132.40, 132.50 next week. Now, there is the other scenario, which is this one right here. The one that the S wave ended at the top right there, and then we have a questionable 5, and we are walking in a flat wave 2 before going lower. That's what we see for the euro. We know that sooner or later a bounce of 500, 600 picks is going to happen. That's what the US dollar is telling me, and that's something that we're going to cover on the seminar on Monday. Now, let's move on to another risk pairs. If that's the case, we're going to start with the Aussie Yen, a very risk named or risk correlated pair. This pair did a clear 5-way swing to the upside. What this telling me? This telling me that risk is going to be off. Very interesting, right? This telling me that risk is going to be off. Don't you guys look and think this is not the same chart of a S&P 500? Yes. You're going to come here to the S&P 500 and you're going to see that is exactly from here the same chart. Very likable, the same chart from here. Look, you have the move to the downside, out, down, out. Now, what that happened is that if I know that the Aussie Yen is going to make a 3-way move back against this move that in Aussie comes to be in 5 ways, in the S&P looks to be in 3, 1, 2, 3, that draws the conclusion that this scenario that we're showing here is possible, but is the less likable. Another scenario that is possible is the one that I tend to favor right now, seeing an Aussie and another pair, which is this one, where the pair now is going to drop like in a flat, is going to drop in a flat to trade lower. Now, that's looking at an Aussie Yen. And that way, the index is going to trade lower to around 1184 before going higher. That's going to be a stronger US dollar. That's going to be the stronger US dollar that is going to end the move in the risk of trade, take the dollar to 81.50 before going lower, right? Now, and then that's going to take the euro, that move there is going to take the euro to around 127 area before going higher when the S&P involved in the newest correction. Now, in the newest move to the outside. Now, let's take a look to the dollar CAD, another pair that correlate almost 95% with the S&P. Look, 1, 2, 3, 4, 5, very well correlated, and guess what? This move right here is telling me that like an Aussie Yen risk off is gonna be on for at least 3 ways. That also draw me to believe that the S&P can make it flat in 3-way backs, allowing the euro lower, dollar higher. That's when, if you're gonna play out with the risk off trade. Now, let me show you another pair very well correlated with the US dollar. That pair is the Norwegian krone. Look, the Norwegian krone chart on the daily, it looks very similar to the US dollar. But you can say 1, 2, 3, 4, 5, or you can say A, B, C, W, A, B, C, Y. I'm targeting in this pair, it looks like seeing the first leg here, possible A, B, Z, like the dollar, that we are in the B way of the final legs out. This low right here comes from the 50% back, right? This is a 3-way move that we have right here on the daily. Now, what I'm favoring is a move higher to around 606, 614, and test this trend line before going lower. If it's a double zigzag in this pair, then this pair is going to look from the 614 area, which is the equal legs. That's about 126 in the euro dollar, about 82, 81.50 in the dollar. Now, let's take a look at some more time frame in this pair. If we take a look at the Norwegian in this 4-hour chart, this is what we got. This is what we got. We see that from the low that we are identifying as either S or 4, what we got is A, B, C, W, S, A, B, C. So this is corrective in nature. Because this is corrective in nature, we have 3 backs, and then we have A, B, C, W. If you take a look, we are right here now. We got another 3-way back, almost to invalidate the next. So, if you take a look at this Fibo, he bounced from the 50 back, like I say. Now, this needs to go higher. If you look at it, it needs to go higher. Most likely, that's what we're favoring the scenario when we are in the US dollar index in the final leg higher. Same with the euro within the D way. Now, what we're gonna get is very simple. It's like this. Most likely, 2 avenues. Either it's gonna drop here, we're gonna mark A, we're gonna do a B way, and another rally coming in. Now, for this pair to go higher, guess what? The US dollar needs to trade lower. Needs to trade higher. So, if we're gonna take a look at the 1-hour chart right here on the dollar and the Norwegian dollar, the US dollar against the Norwegian krone, what do we have? Let me go a little more right here. Like I say, we have 1, 2, 3 swing. Now, what do we have? A very similar structure to the dollar, a very similar structure to the euro. But this is more clear from the lows right here. What do we have? We have 1, 2, 3 waves, 3 backs, A, B, and I want you guys to understand this. A, B, C, W, S, A, B, and it looks like this pair is looking right here from around 6 to end at W, S, Y structure. That's when they equal. And then from there, we should test lower to minimum to this support area, 158. If no, we're going to trade even lower and break this low before high. So, in other words, we are presenting the scenario when we have WSY. That scenario is going to take the euro to 1. That scenario is going to take the euro to 132.44 area. But if the flat is the one playing out in the euro, then what we're going to do is this. We're going to do 3, and then this is going to become A. This is going to become B, like this. Forget about the capital letter. And then we're going to get this B around here, and from here we're going to trade higher to 616. That's going to be 81.50 in the euro. In the dollar index, that's going to be around 128, 127 in the euro. So after doing the whole day, I would say this: a 3 ways back, a 3-way in risk off is very possible, or a move in favor of the risk off is very possible after a small correction in most pairs. That's what I see. In other words, if we go to the euro, should be, look, this is a scenario, finishing the first leg of the last leg of the trend and 3 backs, and then higher. Look at this. It can be the case on the case of the euro about this scenario. We can make the case from finishing the correction in favor of the dollar and 3 ways back to 32.44 and then lower again. That's in a scenario. Why are we favoring that? Because the dollar CAD, because the Aussie Yen, even because the S&P. If you take a look at the small S&P, a small time frame S&P, this out move, it looks like we have 5, 3, and then if you downgrade the RSI, you're going to be able to see that this move that started from here, when you downgrade it from here, you see that it went all the way higher, like 1, 2, 1, 2, then 3, 4, 3, 4, and then it's ending 1, 2, 1, 2, 3, 4, 1 through. It's ending a move with divergency already. That shouldn't happen in a wave 3. So in my conclusion, the S&P is either doing a 3-way or nesting to the outside. But no matter what, we should see, after finishing, we should see 3-wave or US dollar strength, or risk off coming in, if it's right here or in a higher degree to here. But at this stage, what we're favoring after doing the weekend out day is that the risk off have like an 80% chance to have another leg and then finish the move. That's when it comes to the risk of dollar and all those pairs. One more time, this is the scenario on the US dollar index on the daily, when even though the minimum target is met, because you have 1, 2, 3, 4, 5, you have divergency on the high, it can be done. But after seeing the cat and after seeing all those pairs, I don't know. I mean, the cat and the Aussie Yen didn't break the high that they need to break. didn't break the high that it needs to break. So that drove me the conclusion that, that it's very possible that we get another leg higher. But the new high is going to be terminal, and a huge correction against the dollar is going to happen. Now, let's take a look pretty fast to copper and oil. Okay, let's start with copper right here. Copper, like you guys see, it did a textbook, looks like leading diagonal. 1, 2, 3, 1, 2, and then 1, 2, 3, 3, 4, 1, 2, 3. It's at the 618, and what we are expecting, a three-way back retracement in copper before going higher to 4 in the final leg right here. So risk off right here. Another one, let me take a look to oil. Look at oil, guys. Another five-way move from the lows. 1, 2, 1, 2, 3, 4, 3, 4, and 5. What's coming? Risk off. And then finally, let's take a look to the US dollar. US dollar from the high did A, B, Z. So technically there is three ways on nesting. I have an issue, which is that this also looks corrective to the outside. Now, with that in mind, it's very possible that we have A, B, C, D, E in a triangle. It's going to test 80.37, which is this resisting area, and then from there can go to the new low in three ways to complete most likely B, and then trade higher if this is not the end of the move. If this is not the end of the move, then the US dollar next high right here, 81.50, 82, should be favorable, because that's going to be a long time high in the dollar. Now, taking a look at the dollar in the 8-hour chart, this is what you're going to get. Same scenario. Either it's a flat higher, then we have 1, 2, or we have already, because it's corrective, you have A, then maybe, this is the top, and then because it's corrective, you can get A right there, make it like a flat, B, and the final leg higher. That's one scenario. The other scenario is the one that called from the top on it already, which is this one. And now remember, it can be nesting, or it's going to get deep. This leg doesn't go here. That's called for the whole move to end right here. This is then wave 5. That's the less bullish dollar scenario, that this is a leg 5 already, and then from there we're going to get a deep retracement on the dollar. So still, this is how I like it. I believe that the dollar should be sold around 80, 80, 70, which is the sense of buying the euro around 130. Now, I like also buying the dollar CAD after 2 more lows, but that buying the CAD is a contradiction of buying the euro dollar. So I would rather wait and sell the dollar around 132.44 and buy the CAD around at current levels, or selling Aussie Yen at current levels. So technically speaking, it's a toss, but we are slightly favoring another high in the dollar before the number, but it can go both ways. All depends, like we've been saying for the last week, of the S&P. So let's leave it there. See you guys on Monday, and hope everyone have a Merry Christmas. Thank you.